Hi everyone, hope you're all doing well, and today I'm doing my UK portfolio review for January 2021. So we'll go through this today. I'm going to show you my UK listings, and then after that I will do a US version in probably a week's time, maybe 2 weeks time, and show off my US stock market portfolio and how everything's going. So yeah, this is a series that I've run on the channel for about 3 years I believe now, and it just kind of keeps up that transparency. You can kind of track along with how my portfolio is doing, see all the stocks that I'm owning, the stocks that maybe I own and haven't talked about for a while, how they're doing and everything like that. So yeah, hope you enjoy it. Now, just to let you know that the last time I did it on the main channel was October the 4th. So I upload my portfolio reviews now every 3 months on the YouTube channel. If you do want to get it every month, you need to be on the Patreon. So every month, like the last few episodes, I've been on the Patreon, so that's where you get more of a regular update on how everything's going, as well as buy and sell alerts, and also there's 2 exclusive videos a week on there. So with what you get on there for the price, I think it's absolutely amazing, as you guys on the Patreon would know, and if you don't know, there you go, that's what happens on the Patreon as well. And there's 600 members on there on the Discord to talk to as well about stocks every day, and that's where I'm best, that's where I'm most active to message about talking about stocks as well. So yeah, if you do want more regular updates, that is where to be. And just to let you know, if you do want to start investing, there's some links to some brokers in the description as well. But going back onto, I have to try and remember, because obviously I've done this before on the Patreon, but when I come back onto YouTube, I have to look at where we're at in October time. There hasn't been too many changes to this portfolio overall. The big changes is that I think I averaged up on Card Factory, which was not doing that well, and it's been on a very good run recently. And Jet2 and National Express, both those companies seem to get really hit hard over this period because of the new virus strain that has come out. Have to be very careful about what I say in YouTube and everything like that. But yeah, the new virus strain that's come out, that basically sent them 2 stocks down, as they had a bit of a wobble, as a lot of things did when it was announced. But they've been on a bit of a recovery, Jet2, National Express. If I didn't average up, actually, I probably would still be up at probably over 100% on them 2 stocks as well. I did buy a little bit more K-Box. I have bought, since this video, a little bit more ASOS, a little bit more Boohoo. The Taylor Wimpey position, wherever that will have been here, that's been sold. The reason why I sold that is just because I prefer Barratt Development, and I just wanted to have just a one UK house builder. I just thought having a portfolio and having 2 UK house builders was pointless, so I thought I'd move that some money somewhere and maybe buy a bit more Barratt Developments. So I was just consolidating the amount of stocks that I own, really, more than anything, and using that capital elsewhere, especially with what's going on with Boohoo at the moment. And the other big change was that Greggs, which is here, that position halved from here. So I did sell half of my Greggs position, or I think it was actually just slightly under my Greggs position, I can't remember. But I sold that for like 110% gain or something like that. Obviously you guys on the page will know exactly how much that was, but yeah, those are the only changes that I have made. And obviously it was really nice to get some Taylor Wimpey profit out there and some Greggs profit out there. But this is the UK portfolio right now. I'll try to spend a minute or 2 on every holding and just where I'm at with every holding and everything like that. So yeah, hope it's useful. If it is, hit that like button. So I'll start off with the top, which is 88 Casino. So we're currently up 108% on that one, which is absolutely fantastic. 100% return. For me personally, all of these investments, I aim for a minimum of 100% return in 2 to 5 years. So obviously I've held that for coming up to 2 years now. So to be already there in 2 years is brilliant. Great dividend. It has had a bit of a major pullback, as a lot of these like gambling stocks have done, the likes of Flutter, DraftKings, Gang, all them top stocks have had a massive pullback. This is the same. So it's actually very interesting right now, because I'm actually like looking and thinking, do I average up on this one? Which is something I'm debating at the moment. So yeah, I mean, originally I was actually going to sell out of it and maybe move it somewhere else, but now looking at how much it has fallen off, I'm thinking, do I buy that, or do I potentially maybe go buy Flutter? I'm not sure really. So the only thing I don't like about that is they bought a lot of the physical locations of William Hill, like the actual stores, and I'm not a fan of that. I always bought 888 because it was like online only, so that's a move that I'm not a really big fan of. So that's the only thing that's really held me off averaging up and not really deciding what to do there. So still very 50-50 on that one. But Airtel Africa up 107%. That's done absolutely amazing. I've it's performed better than what I could expect, and I want to average up. I want to buy more of that position, but it's just that it's been on such a good run. It does have times where it does drop like 20% out of nowhere. So if we do get one of them, that would be lovely if it happens. Next up is ASOS. So this is a bit of a new position, like it's not really been in the portfolio for over 12 months yet. We're down 23% on this one. I could potentially buy a little bit more ASOS. I'm about 75% built on that position right now, so I wouldn't mind buying a bit more of that one if I could. Then we've got Barrett Developments. So obviously I got rid of Taylor Wimpey just to have Barrett Development. Would love to buy a bit more of this one, so we'll see what happens there. And then we've got Boohoo. So Boohoo is still my biggest holding here. Still makes up 31% of, I'm down 31%, but it still makes up a very big chunk of the portfolio here. I will potentially buy a little bit more Boohoo, and I don't mind making it a slightly bigger position than what it is right now. My only little concern is that when the time does come and Boohoo has the potential out of nowhere to like shoot up like £1.50, £2, and I think it will do. I think this is when there's a thing about like backing your high conviction stocks, and for me, for sure, Boohoo is like my highest conviction stock, and that's why it just makes up such a chunk of this portfolio up. But at some point I will have to readjust this when it does start going on a run. That's my only thing that I'm concerned about it, and I don't know how much more Boohoo I want to buy, to be honest with you, but yeah, you can see here that is by far my number one position and my highest conviction stock in this portfolio. Next up is Best of the Best. So I've had this stock for, I think, coming around to maybe 10 months or something. Hasn't worked out ideally how I would want it to play out. It's not done very well. The stock is down, but I'm not really panic selling out of this one. I know a few people have been a little bit spooked by it moving down so much, but you know, that is always the problem when you're buying a stock that has benefited from a CV situation and has been on such a good run in the share price. I realistically did not think it would fall this much though. That's the only thing that has taken me by surprise. And I don't want it to be a big position, because my big thing with Best of the Best is that I am slightly worried on the moat of it. I don't think it has the biggest moat ever, which is why I never want to commit it to a position size of anything else here. I look at everything else. It's definitely one on here that has the weakest moat. It's so easy to get into this space. So I really got this for a little bit of growth and dividend, and I'll still pick up some, a fair bit of dividend with this one. It's just the growth at the moment is that I'm really looking for a trading update really before I can decide much further on this and how everything's going. But yeah, I'm just happy to hold this, and I think in the long term that still will turn around because people will buy it because of the dividend, and I think the growth will come back. This has had a big sell-off in the share price, and I could argue probably too much. And then we've got some Kate Box. So I did buy some more Kate Box. I think I averaged up. I think I mentioned at the start that I averaged up Kate Box. I'm not sure if I missed that off the list, but I did buy a little bit more Kate Box. I would like to make this a bit more of a bigger position, maybe buy a bit more. The problem is I'm up 10%, and it is at like decent valuations. So I am just being conservative, and if this stock does drop 20%, then rather than averaging up, I'm rather play the patient game and see if it does like drop off 20%, and then I can buy more rather than averaging up. So that's what I'm really doing that one, because it's been on a good run and it is trading at a decent valuation. So I would love to buy more, but I'm going to play the patient game with this one for sure. Card Factory. So like I said earlier, I did buy, I think since I last updated on YouTube, I did buy a bit more Card Factory just because it had such a reversal in the share price, and I think it was because people were spooked that with Card Factory's debt, and if they were to close stores again, that would mean a massive problem when you've got the debt that Card Factory do have, and people like, could this potentially, you're talking bankruptcy here if they haven't got the stores open, but they didn't close. They were still open through Christmas, the busiest period, and from what I can see, they were busy every time I went past through November and December. So yeah, hopefully when they do a trading update, that brings some positive news out, and I think the big fear that they need to have a decent Christmas period, they have had that, so we'll see here. But I think that is I think that has so much potential. The only reason why I can't commit it to a bigger size is just because of the balance sheet, but I think that will do well. Next up is Jet2. Same again, this one had a bit of a hit, but then had a bit of recovery after they realised the variant weren't as bad as what people thought they were going to be. bought a bit more, just happy to hold that one. It's the only really airline that I like from the UK side of it. I like Wizz Air, that's not too much of that's a decent one, but Jet2 is my other one, and I'm just happy to hold that one. Greggs, up 111%, did sell some shares off in Greggs, half my position in Greggs. The reason why is just because they are now at a valuation that I think is very high. They will have to do a lot of amazing things to carry on justifying the valuation. I think the only way to do that is by doing international expansion, and that would come with its own risk. I also realised that Roger Whiteside's going to leave, and I think that has now come out that he's planning on leaving. And I thought, well, there's always that risk when you have a new management team as well. So I think it's a great company. That's why I've still got some shares in it. But to have it as I think it was my third biggest position, Boohoo, S4 Capital and Greggs, I thought I'll just, take that risk off, and I put, a while ago, I put that money into Boohoo, which I think is the better valuation for the company right now. Hollywood Bowl, 52%. Hollywood Bowl is one that I look at very often and consider making my biggest position. Fantastic company. So looking forward to seeing their trading update, which I think is quite soon. And then Hotel Chocolate up 30% on that one. My position's fully built. Had a very good year last year, and I think it will have another great year this year because of its international expansion. JD Sports up 100% on that one. I'm not too sure what I'm going to do with JD Sports at the moment. I just don't know. I've decided, because it's quite a small position really, I'm just deciding, like, do I use that somewhere else? Do I average up? So I haven't got much to say much on that one because I haven't decided myself on it. Legal & General up 54%, one of the dividend kings in the UK stock market. I think it's such a great stock for a portfolio. It just does its own thing, brings in your dividend. The likes of Airtel and Legal & General, just two great dividend stocks for a portfolio. So more than anything, I want to make that a bigger position. National Express up 70%, doing okay, averaged up a little bit on this one. Got hurt because, once again, of the virus concerns, but still doing its thing, doing well. S4 Capital, like a lot of the growth stocks in the US, it's been absolutely slaughtered. The US has actually creeped into the UK on a lot of the growth stocks. A lot of the growth stocks in the US are down. It's the same in the UK. A lot of the growth stocks recently have had a lot of reversal. Look at the likes of Boohoo, for example. S4 Capital is exactly the same as well. Had a massive pullback, and S4 Capital is now getting to prices where I'm actually really considering buying some more. If I didn't have the likes of Boohoo on sale, ASOS, Gang, DraftKings, and all that, there's a lot of stocks at the moment to buy. So if it wasn't for all of them being down so much, I'd probably buy a bit more S4 Capital, but because I'm still up 16%, because I've got a decent position built, for me that doesn't come just a priority yet. If we start talking another 20% dip on S4 Capital, then it could come one of those priorities. But yeah, it is one I have thought about buying a bit more of, but the time just hasn't come right just yet. But it's definitely near my top of my watch list anyway. So yeah, that's my UK stock market portfolio overall. Hope you enjoyed the video. Hope you liked me covering a few of these stocks for a minute or two, maybe stocks I haven't talked about for a little bit as well. So and hopefully you enjoyed the little transparency of seeing once again how everything's going, especially in a period of time where it hasn't been too generous for the stock market. Still for me to come on here and show you all this, and yeah, I'm happy with everything. Obviously, I would like, best of the best to hopefully turn it around. ASOS and Boohoo, I'm happy to still have the chance to buy them out a little bit more, but everything else, the stocks that are here that have now come, them longer term holds that are entering that 2-year period of where I actually aim for a 2 to 5 year period, everything's doing very well and moving in them sort of lines, which is great. And to have so many 100% club members as well still here, we're talking potentially, 888 Casino is one, Jet2 was one if I didn't average up, Greggs was another one, the likes of JD Sports was another one, National Express was another one if I didn't average up. So I mean, there's like 5 nearly 100% return members in one portfolio, which is absolutely amazing. So yeah, pretty impressed how everything's going. Even the stocks that are down at the moment, I'm happy that I still have opportunities to buy. If I didn't have any opportunities to buy, I would just be sat here with the cash pile with nothing to do with it. So yeah, I'm still happy to have some opportunities to buy. But yeah, hope you enjoyed it, and I'll catch you all in a bit.